With the FTX saga unraveling, I wanted to spend some time with you guys talking about some other potential platforms, exchanges that could be suffering with similar issues. As I get into this video, if you find it useful and informative, you know what to do. Hit that like button. I do appreciate that. If you're new, subscribe and stay up to date with everything that we do here at Cheeky Crypto. Join us in Discord. We cover a lot more in the Discord server. We stay up to date in the Discord. Links in the description below. Guys, let's get into it. We're going to start things off, guys, by taking a look at this one here. This is an interesting one. It's actually a little bit more complicated than this. So I imagine that this is going to evolve a little bit over time. But following on from the ins and the outs of the FTX kind of saga, I'm not going to go into all of those details. I think they've been spoken about enough on YouTube, and there's enough resources out there for you guys to figure out exactly, you know, what's going on, what's been going on, what's happening with FTX, Alameda Research, etc., Binance, and all that kind of stuff. Now, this one came out today, and it is interesting. So, you know, FTX gets rescued by Justin Sun and OKX in billion-dollar deal. BlockFi hires bankruptcy counsel. We'll talk more about that in a moment. But essentially, if we just come down here, we'll talk about more about what it is, right? Basically, the loans are over-collateralized with liquid assets, including Robinhood Inc. shares, but BlockFi is no longer certain about where the funding for the credit lines with FTX US and collateral of the Alameda loans came from. So things get a little bit confusing around that. But, you know, basically the announcement really is this one here, which is that they are pleased to announce that they've reached an agreement with Tron to establish a special facility to allow holders of TRX, BTT, JST, SUN, and HT to swap assets from FTX on a one-to-one with external wallets. So there's some positivity around that in terms of, you know, what Justin Sun and Tron and OKX actually for that matter are willing to do for the kind of the crypto space. So just bear in mind there's a few things here that are going on. I won't talk about this in too much detail, but you'll kind of be able to check this out on Crypto Newsflash if you want to as well. A little bit of detail there. Now, the other thing that came up recently, just before we kind of get into what other platforms might be at risk here, is to talk that basically FTX US, and Alameda file for Chapter 11 bankruptcy in the US. SBF resigns, etc., etc. Now, essentially, for those who do not know what Chapter 11 is, it's a form of bankruptcy. This is not Chapter 7, but Chapter 11 here, where those assets can be used to basically pay back their creditors to a certain point, and then, you know, they're kind of insolvent, and it's kind of just going to wind on down. Now, Chapter 11 is not positive for retail investors, as I understand it, but Chapter 7 would be. Now, I'm not obviously a lawyer. I don't know the technicals, ins and outs of all of these things, but from my limited understanding that basically Chapter 11 is not as good as Chapter 7 when it comes to retail investors in terms of regular individuals who are using FTX's platform. Now, light up the comments down below if I've misunderstood that. I'm not in the US. I don't fully understand it. I said I'm not a lawyer, but as I understand it from the experiences with Celsius, Chapter 11 is not a positive one when it comes to people getting their assets back. But do correct me if I am wrong on that. But it is where it is. Now, let's actually talk more about the other kind of stuff, the stuff that is potentially other platforms that could be going insolvent. Now, this is not something I want to do lightly because these platforms may or may not have the same problem. This is a little bit of speculation and a little bit of concern, and I do want to kind of confirm that, you know, it's always better to maybe take those assets off the exchanges. But with that being said, that in itself creates issues for these exchanges. It's like a bank run, but it's on crypto exchanges, right? So we're talking about these crypto runs where people are quickly withdrawing their funds off of the exchanges, basically creating liquidity-based issues at this level. Now, I'm going to go into 4 other platforms that may have very similar issues than then they're the same as FTX, right? In the way that they have a very centralized supply of tokens that they may have over leveraged themselves and put themselves into very vulnerable positions. Now, that's not a guarantee. I do not know. I cannot confirm it. But I do want to put this out there that these particular platforms may be of concern, and therefore we might want to be extra cautious with them. Okay, so take that as this is where this video is coming from. This is trying to get you guys to be a little bit more aware that in the background of some platforms, things might not be as rosy as they may seem or thought that they were, and we might want to take some kind of precautions when it comes to that. Now, in the description below, you'll find links to the Ledger hardware wallets. They're a fantastic way of keeping your crypto offline in secure cold storage units. This one here essentially is the Ledger Nano X. They're great, reasonably affordable little devices that basically keep your crypto off of the exchanges, making you have control over your finances, right? Rather than allowing the exchange to do a Chapter 11, such as this one here, where you are not at the front of their minds when it comes to actually doing the right thing. So let's go ahead and move into this. Okay, so the first one happens to be KuCoin. Now, in here, as you can kind of see, KuCoin's top 10 token holders. Now, the top 10 token holders own 98.5% of the tokens. So this is pretty centralized, and it's a pretty big problem. Okay, so the total token supply is 165,641,743. Okay, and token holders a total of 5,352. And as you can kind of see here, we have this huge chunk of this donut is basically one singular wallet. And then you have this one over here. This is KuCoin 6, so that looks like a KuCoin wallet. This one doesn't have any initials on it. KuCoin developer has a little slice and so forth. But this is the top 10 token holders. This is a pretty big slice of the pie. So we should be a little bit concerned that such a large amount of that supply is held within such a small number of wallets. This could be a bit of an issue when it comes to KuCoin. So I'm not saying that they're insolvent. I'm not saying that they've got liquidity-based problems, but we look at how FTX got into this particular situation with some very dodgy dealings, some very dodgy kind of things going on in the background. And they were using FTT, as basically collateral for leverage positions. Now, if these particular players are doing the same thing on KuCoin and they're using the KuCoin's native token as collateral, then you might end up in a very similar situation. So we might look at KuCoin here and start thinking to ourselves, it might be a good idea maybe not to hold funds on that particular exchange. Okay, but again, do your own research, come to your own conclusions. I will reiterate this many times over. I'm not a financial advisor. I can't give you financial advice. I'm just giving you my thoughts and opinions as I see it today in the kind of the data and the charts, the news. So just bear this in mind. KuCoin, we might want to start to dig in deeper and do more research into what is going on at that particular exchange as to whether or not we want to be a little bit more cautious. Let's move on to the second one. This is 𝗕𝗘𝗪. I'm not sure if I'm saying that right. These are not exchanges that I tend to use very often. But again, here you can see top 10 holders collectively own 98.6% of the native token. Here you can see that the breakdown of all of this, and the null address doesn't really count, but you can kind of see it there. You can also see here 𝗕𝗘𝗪𝗔𝗥𝗘 Bridge has that breakdown, and you've got all of this here as well. Now, this is a whopping 493 million coins, okay, tokens here, held out of the 500 total. Okay, so that is a staggering amount just held inside here. So again, this might be, if they've over-collateralized themselves, an issue that we need to be aware of. Again, do more research on this particular exchange. Is there a problem? Are they leveraging themselves? Have they overexposed themselves? And are they open to the same risks that FTX did? Okay, so keep these things in mind. Let's move over into the third one. Okay, Bitfinex, the LEO token. Okay. Over here, we can see we have the top 10 holders collectively owning 99.84%. Okay, again, same situation, right? There's a total supply here of 660 million, and we can see that it's 658 million is held in these top 10 holders. And you can see the staggering amount here right now. You've got the multi-sig wallet owned by Bitfinex. Now, this is potentially, if they've, again, used that as collateral, and if they are using that in leveraged ways, they could have overexposed themselves. This should be a concern for the particular platform, and therefore 𝗵𝗕𝗄, we might not want to hold our assets there for a long period of time. What I'm saying here, guys, is that we don't necessarily want to completely boycott these guys. We're not saying that you don't want to use them. I'm saying if you're going to go out and transact on these platforms, you do that. You transact on these platforms, and then you take it off the exchange and you keep it secure, so you don't end up at the same situation that you were with Celsius or you were with FTX. So just kind of keep these things in mind. You can see here the FTX exchange is also listed as holding this LEO token, and they're in this bracket. Okay, so they're a small slice of the pie, but they're a slice of this pie nonetheless. And during those liquidations events, that will get sold off. So just bear in mind that the LEO token might be a bit of a concern. Okay, now I'm going to go and probably show one of the most popular exchanges next that could potentially be exposed or exposing itself to this particular issue that FTX has had as well. And this might shock people, because I was a little bit shocked to see it in the list of ones that were doing or had very similar kind of setups as we had with these three. These three, you know, everything from kind of KuCoin, I'm not surprised. 𝗕𝗓𝗪, not surprised. If I come over here to Bitfinex, I'm also not surprised. There's probably a whole host of others as well that are in similar situations, but this one kind of shocked me a little bit. Crypto.com. So Crypto.com, top 10 holders own 92.59%. Okay, that's 52 billion. 52,585,869,212 out of the 100 billion supply. Okay, so bear in mind that is a lot. And there's another address here owning a fair amount. We'll ignore that one for now. You've got some other accounts in there that are not named. And then you've got these slices in here as well. You've got the multi-sig wallets. There's a few unnamed ones here. There's another multi-sig in there and a lot of other unnamed ones. This, again, was a bit of a shock. Now, again, like I said, if they have used CRO as a collateral, and maybe they've used leverage, and maybe they're overexposing themselves, there's issues here in all four of these particular platforms. The setups of what was going on at FTX kind of looks very similar to this. I'm not saying that these guys are doing the exact same shady practices that FTX and Sam was doing, you know, with 𝗕𝗓𝗪𝗔𝗥𝗘 and FTX exchange and all of that kind of stuff. I'm not saying that they're exactly the same. I'm not saying that at all. They might be perfectly fine. But what I am saying is there's potential setups for very similar situations to occur, and we might want to really consider what we do as retail investors in terms of where we hold our assets. Do we want to be holding our assets on these particular exchanges for a long period of time? Probably isn't a wise idea, in my humble opinion. In my opinion, I think it's much safer to be taking things off of the exchanges and holding them in cold storage units. With that being said, though, we have to be super cautious here, because if there's too much of a run on these exchanges, then there's going to be potentially liquidity crunches occurring at these particular platforms that could potentially compound any potential issues even further. So we have to be a little bit cautious. We have to be aware that if we are to transact, we're just on these platforms for that particular purpose, that we go in with our, let's say, stable coins, we take whatever we're looking for, and so say we're just going to do a trade on Bitcoin, stable coins go in, we trade Bitcoin, Bitcoin comes off. We don't stay on there for a long period of time. I've been practicing this pretty much for this bear market through more specifically KuCoin, because I don't like holding a lot on KuCoin at any one point in time, but KuCoin is a great resource for some altcoins that you can't find on other platforms like Binance, for example. So I do use KuCoin. I use KuCoin regularly, and it's great, right? But I don't stay on there for very long. It's on and it's off. I use it for transacting, and I don't use it for storage. And I think it's better as a retail investor to get into that mindset of using platforms for transactions, but then using a storage device to store your crypto afterwards. Okay, so I wanted to kind of just do a video here, a quick one, nothing too major in terms of like technical analysis and stuff like that, but I wanted to kind of do a video that kind of showed that actually there's other exchanges that we might want to be a little bit wary of using as storage facilities for our cryptocurrency assets. As this issue with FTX and 𝗕𝗓𝗪𝗔𝗥𝗘 and BlockFi and other platforms that are going to start to emerge as potentially in trouble, there's going to be a certain number of people looking for looking to pull their crypto off of the exchanges, and therefore we have to be a little bit cautious, and we should potentially be looking at trying our best to make sure that we are protecting our assets the best that we can as retail investors. Let's not make the same mistake multiple times over. Let's learn from them, and let's get on with this industry, and let's move this industry forward. Let's actually take our learnings and run with them. Guys, I'm going to leave this video right there. Do join us down in Discord. Links in the description below. If you haven't got a hardware wallet, check it out. Ledger down below in the description. And guys, I'll catch you all in the next one.